Ray Barros, CEO of Ray Barros Trading Group. He joins us from our Singapore studio. Ray, not bad. I mean, Asian markets doing pretty well. Let's take a look at China in particular. Not as strong as some of the other Asian markets today. There are signs that profits from mainland Chinese companies are plunging if the yuan were to strengthen.
Yeah, I think China is one of the key markets we have to look at. You've got the US dollar, the US market, stock markets, and the Chinese markets. And the Chinese market is really a function of the money supply. Last year, I think at the end of March, the Chinese banks had lent out the whole year's budget in terms of lending. And since then, the government has been on, off, and that's being reflected in the prices in the Chinese stock index. I think that if the Chinese market goes, then I think you're going to may see a follow-through to the rest of the Asian markets. For me, the critical levels in the Shanghai index is the 2890 level on the downside and around 3100 on the upside. So until those two levels are taken out, the market is just trading a range.
What is the probability that U.S. and Chinese indices are about to correct? What are you looking out for?
I think that's, I would rate it about a 60% probability that the U.S. index is going to correct. I think the Chinese has got a slightly larger probability, say around 70. The problem with the U.S. index is since February of this year, the market has been going up on really light volume. And for me, the advanced decline numbers don't look that great. The advanced decline volumes don't look that great taken as a whole. You see the chart in front of you, and that critical level is around, that low level's around the 1,044.50. That's the February low. And the market is now ground up. We're tackling the highs again at 1180 last night. But as I said, you might forgive last night and say, well, that's a day before the holiday. But, you know, it's this whole period, I call it a grind. And for that reason, I think the chances of a correction are pretty strong. Having said that, I do think we will, at some point this year, see the highs around the 1576 area, 1460 area. But then I think we'll come back down again. I think we're repeating 1966 to 82, basically.
You're saying look out for 1059. If we don't see 1059, it is a strong market.
1059 in terms, 1044 on the downside in terms of the S&P, Haslinda?
Mm-hmm.
Yeah, well, if we don't take out 1044, then this market will continue grinding upwards. And, you know, as I said, my ultimate target for this year is somewhere in the range 1576 to 1460. That area, that's what I call the primary sell zone. I see us trading a sideways market in the U.S. stock market, repeating the 1966 to 1982 pattern where we just went up and down for about 15 years. And then we finally broke up in 1982 to make that the bull market that ended in 2000 and that ended in 2000. So I think that's what's going to happen here. I think we will get a correction. If we don't get a correction, we'll still grind up. But the more we grind up on this low volume, which suggests lack of participation, the more susceptible we are to a sharp drop.
Ray, how about Japan? The Elliott wave, suggesting the Nikkei may extend its rally probably to, what, 12,000, and that's according to MF Global. We heard from the man earlier on. What's your take on that?
Yeah, I won't disagree. Japan really, to me, is a function of the yen. Again, you know, there is this correlation between the currencies at the moment. If the yen remains relatively weak, I think the stock market will continue to go up. 12,000 is as good a target as any. I don't follow the Japanese markets. I follow some of the others. But I would tend to agree with MF Global in this run.
Which market are you liking in particular at this point in time?
Are you talking about stock markets?
Mm-hmm.
I don't like any of the stock markets at the moment. I think there are better opportunities elsewhere.